So the moment you start having a computer and then you start exchanging information, it changes dramatically the shape of the industry. Unfortunately, because of heavy regulation, the industry did not change as quickly as the technology that was available. I'll give you an example. How could you lend to retail clients if you don't have an address, if you don't know where they live? I mean, the client could purely disappear, right? So it's difficult to control a loan book with such big problems, with no database on the profile of the client, etc. So at the time, we managed to create a product which was basic, and that's one of the biggest challenges I can tell you up front of the digital banks. They open a bank, they open an account for you, you deposit the money with them, nothing happens, they don't have loans, so the money starts to burn, and obviously they then starting making huge losses because they don't have the lending side of the business. Obviously, we live in a digital world. Everyone wants a simple solution for certain things. For the other things, I want to have a human in front of me providing me with some advice. Okay, so I think banks have to be intelligent to focus on certain areas and segments of the products and clients where there is a need for intervention. So you have on one side the everything digital, so I don't need to interact with the bank to make a payment. In the past, I had to go to the bank, make the payment, or write a check. Now I do it on my app. I don't need someone to do this for me, okay?
Welcome to Africa Tech Talks, where we bring you the insights from leaders shaping the technological and financial landscape in Africa. Today, we are very pleased to have Pedro Pinto Coelho as our guest. Pedro, I will do a brief presentation of yourself, but I will ask you to complement as well. So,
Sure.
Pedro is a distinguished Portuguese business leader with over 25 years of experience in Portugal, Brazil, and Africa as well. Within his career highlights, he was CEO and board member of Standard Bank in Angola and in Mozambique, where he helped to transform the banking landscapes in those countries. He also pioneered digital banking in Portugal as a CEO of BNI Europe, and also held senior positions at global institutions like Citibank and Banif Investment Banking. I know that Pedro, you have been recently, or you have other responsibilities. So I would ask you also to introduce yourself on your most recent challenges.
Okay. Well, it's been a very comprehensive presentation, but I will just add the following. So I think the reason why I have maybe a unique view of financial services is because I was fortunate to have three vectors that guided my career. Number one, I'm an engineer by background, so I'm not a traditional economist or someone with a management degree. Number two, I come from an investment banking, financial services background, so I started my career in investment banking, which basically deals with M&A or activity or capital raising in different forms and shapes in different sectors. So I was quite interested in knowing how different sectors operate, and not only the banking sector. And finally, as you mentioned, the geographical exposure. So I was fortunate also not only to study but to live and work in the UK, in Portugal, as you mentioned, in Switzerland, in Angola, in Brazil, and now I'm also supporting a few companies in Malta, in Cyprus, and in the Philippines. So this gives me a bit of it makes me have to follow what the trends are globally and then trying to adjust to the local reality and think a bit about out of the box how problems can be solved because usually there's more than one solution to a typical problem. So that's why I think I can bring a different perspective.
Right. It's interesting how having a background in the industrial production engineering, you basically did most of your career, or all of your career in the financial sector. How was that? Was there any turning point?
Yeah, I mean, obviously, industrial engineering deals with productivity. So, productivity, you can basically use those tools across all the industries, including the financial service industry. Secondly, project management, all those tools that you use, and discounted cash flow, what you learn was applicable to then transition to financial services. And effectively, what made me move after my MBA was also because I really liked very much corporate finance and how do you appraise different companies and how do you understand how companies work and how companies actually produce revenue and the different key drivers. And obviously, the financial services sector is just another industry. And obviously, after doing a career in investment banking, then I ended up managing more or doing more roles in a management position in the financial services sector, which allowed me to use some of my know-how in that sector and use more or less what I learned in investment banking as well.
Right, right. And Pedro, going straight to the first question that we have here, how did this experience in Brazil, Angola, Portugal, and other geographies shaped your view regarding fintech?
Well, typically it's obstacles. The banking industry has been shaped by innovation, by technology. So, financial services, although it's a regulated sector industry, it's information that you exchange every day. So, the moment you start having a computer and then you start exchanging information, it changes dramatically the shape of the industry. Unfortunately, because of heavy regulation, the industry did not change as quickly as the technology that was available. I'll give you an example. For a long time, regulators wanted to have everything in paper. So, I mean, we live in a digital world, and regulators were asking to have support in paper on every contract, everything. So they didn't accept digital formats until recently. I mean, that was a few years ago. But banking obviously needed to develop itself, needed to reduce costs, needed to make banking available to the population. So it pushed further and further, and that's why I believe each country has been able to sometimes to overcome these obstacles faster because it was a need. I'll give you an example. In Brazil, for instance, when I set up Banif Investment Bank, we had a digital broker. So we actually managed to create what at the time was a novelty back in 2003. So it was a long time ago, 20 years ago, more than 20 years ago. So we had what we called the home broker. So Bovespa at the time, the stock exchange, allowed retail investors to directly uh, be able to trade shares on the main stock exchange. So that was a huge innovation at the time, and the number of brokers starting having their own electronic channel, allowing each individual to trade shares online. Nowadays, it seems like it's something very common, but at the time, it was a huge thing, and we started getting a lot of interest and clients that wanted to trade shares and buy and sell depending on obviously the research they made and the trends they saw in the market. So if the regulator allows you to do stuff that is using technology, then you will see this innovation coming forward. Another innovation I would say was in Angola, for instance, we had difficulty trying to lend to retail clients. How could you lend to retail clients if you don't have an address, if you don't know where they live? I mean, the client could purely disappear, right? So it's difficult to control a loan book with such big problems, with no database on the profile of the client, etc. So at the time, we managed to create a product which was again invented back in Brazil, which is salary loans. So as long as the person had a stable employment, he could get a loan on the back of his salary, but the entity responsible to pay the installment of the loan was the company directly. So the company would pay the bank and pay the remaining salary to the employee so that we have a guarantee that the payment is made before the salary disappears at the end of the month. So this type of, I mean, this is not rocket science, but it needs, again, technology. It needs you to be linked with the company. It needs the company to know that it has to make two payments instead of one. And again, this was an example of an innovation created in Brazil, which now has been spread a bit around the world, and particularly in emerging markets where you can actually lend with a bit more safety and security than otherwise you would be able to, because it would be basically almost impossible you to have a very high level of bad loans effectively. So different markets can have different levels of innovation. It's not because it's Africa, Latin America, Europe, America, or Asia, because there are markets where suddenly an innovation comes because it is allowed to do that. You know, a very good example is the payment industry, a big innovation, M-Pesa in Kenya, where it was at the time, 20 plus years ago, something amazing, and other markets in Africa and across the world in Asia, they tried to replicate, but they were never able to do it in the same way and penetrate as fast as they did in Kenya and the surrounding countries, because other entities got involved, and obviously it became a bit more difficult due to regulation that was imposed in these different markets, and maybe because of interests of the financial system being threatened by telecom companies as well. So depending on the market, you may have the ability to innovate more or less, and the technology is there. It's just a question of allowing fintechs to actually flourish before you actually try to kill them to try to grow under somehow a controlled environment, and then maybe do the regulation afterwards and try to obviously control a bit whatever it requires. It's required, you know, from the experience that has been, and some central banks have done that. They have created what they call sandboxes to try to launch a particular concept or a particular company, and then see how it grows and how it interacts within the financial system. I don't know. That was a bit of uh, a long answer, but I guess I touched a number of points that you.
We'll come back. We'll come back to those regulation points. But it's also interesting that at BNI Europa, you had also some challenge in terms of positioning the bank in certain niche markets, because you had to keep it competitive and profitable, and you have to find solutions, innovative solutions at that time that brought
Yes.
those view of a small digital bank, innovative in a way. Can you also elaborate on some of
Yes,
those?
certainly.
Yeah.
Well, BNI Europa uh, is a subsidiary of a bank in Angola, a mid-sized bank, BNI, which, as you know, being in Angola, you know, it's not a huge bank. So we at BNI Europa realized quite soon, after 1 year of operations, that the bank could not rely on the business cross-selling from Angola to Portugal and vice versa, as opposed to other banks that were already established established in Portugal that were subsidiaries of banks in Angola. So we soon realized that. That's point number one. Point number two, we also came to the market. I arrived at BNI Europa already a year and a half after the bank was open. So I was trying to fix something that was already happening, which was trying to find a business model where we could increase our revenue. And the second aspect, which was quite difficult, was the fact that there was also a bad experience with a particular financial institution on the relationship between the parent and the subsidiary, Portuguese bank, as you know, former Banco Espírito Santo, between Banco Espírito Santo and BESA. So the Portuguese regulator started becoming, very cautious about what business there should be between two financial institutions in two different jurisdictions, particularly European jurisdiction, which is basically controlled and regulated by the European Central Bank, and then Angola and African markets, which are in totally different jurisdictions. So, because of the problems of this relationship between BES and BESA, which ended up with the bankruptcy of the group, the central bank decided to be much more stringent on what type of relationship there could be between two entities that are in different countries. So we also were limited in what we could do with our parent bank back in Angola. So we really were forced somehow to create a new business model. And this new business model basically ended up being developed by focusing more in Europe and not in Africa or Angola due to these restrictions. The third point I wanted to refer was the fact that Portugal was at the time undergoing a difficult moment. So we were overbanked, so we still are probably with too many branches. Very strong competition. Basically, you have every product you could think of, and banks, much larger banks, with the lower cost of funding than small banks like BNI Europa. So that was a challenge. And finally, the Portuguese market was coming out of a very strong economical problem that we had, where we had to be rescued by the IMF and what we call the Troika years. So the setting was not the easiest one, as you can imagine, a small market, overbanked, coming from a economic crisis, and on top of that, the regulator blocking somehow the business between Portugal and Angola or Mozambique, etc. So we decided to create this new business model using somehow the benefit that we were in the European Union. So first of all, we needed capital. So apart from the equity coming from the shareholders, we also wanted deposits. And because in Portugal, nobody knew about BNI Europa, and the people who knew, somehow they were a bit concerned about being an Angolan bank, having a subsidiary in Portugal. So they were not, it was not very easy to capture deposits initially from the Portuguese clients. So we actually ended up teaming up with a startup at the time, well, actually a couple of them that appeared in the market, in the German market, where they would propose raising deposits from countries across Europe. And so we use that channel, the German client base, the Austrian, the Dutch client base, to bring deposits to Portugal. And these clients, they had somehow the quality stamp of this startup, and also the fact that we had a limit of 100,000 euro that the client could deposit with us, and that was guaranteed by the deposit guarantee scheme. So they were not really running risk of BNI Europa. If tomorrow we were going bankrupt, they would get from this fund the 100,000. Anything above 100,000, then it would be a problem. So we grew our balance sheet quite quickly by having liquidity. So we borrowed money from these depositors, And then the idea was, then to lend, the traditional way. Obviously, we could not be lending to big projects or big companies because we had a small balance sheet, small capital. So we had no choice but to lend to individuals and small and medium-sized companies. So we started looking for this, and we started also looking at projects where we could lend ourselves. But having a small team and growing that team would take time. And so we started by creating a network of platforms that actually were originating loans in different jurisdictions, in different countries. Again, at the time, it was not even the term fintech was not even existing to us. What we called at the time peer-to-peer lending, and then marketplace lending, and then this was part of a fintech vertical lending, right? So these platforms basically originated clients that wanted to lend directly to a borrower, someone who wanted to borrow money, whether it was individual, whether it was a small and medium-sized company, and then it could be short-term, could be medium or long-term, could be secured, unsecured. So we looked at different type of peer-to-peer or marketplace lenders, as we call them, and selected a number of them in different jurisdictions that we thought had the better quality of credit analysis and that we were able to originate more clients. And we started buying, originating indirectly through these platforms in Spain, in France, in Belgium, in Holland, in the UK, in Germany, in Sweden, etc., so that we would diversify geographically. We also diversified also by segment. So we lent it to SMEs, typical loans. Then we did invoice financing. We did consumer loans. We did student loans. We did real estate bridge lending. So these are all different products. And we started growing our credit portfolio. So starting earning interest on this portfolio to justify the interest payments that we had to make to the depositors so that there would be a match, basic. And that's one of the biggest challenges, I can tell you up front, of the digital banks. They open a bank, they open an account for you, you deposit the money with them, nothing happens, they don't have loans. So the money starts to burn, and obviously they then starting making huge losses because they don't have the lending side of the business. So that was one of the areas. Then we also started to create the products in-house where we would have our own expertise. One was what we call reverse mortgage, and the other one was a fully digitalized consumer lending proposition for the client, where the client could apply online, or we would make also partnerships with the retailers. So if you go to a store and buy something, you could apply for a loan to basically get a loan to purchase a particular good when it was obviously a high value good. That was one of the propositions. We also did salary loans through the same platform, and also then we also launched the credit card where the concept was the same. Instead of being a revolving credit, you would pay in installments. So if you make a 100 euro purchase, maybe you didn't want to split in any payments, but if you wanted to do a 300 euro purchase, maybe you wanted to split in 3 times or 6 times, whatever would suit you better according to your spending habits. And as you can see now, the buy now, pay later industry is another big vertical of fintech. Everybody talks about buy now, pay later. And even now, the incumbent banks in Portugal, when you do a purchase on your credit card, they ask you if you want to split in different portions. So it became a big industry. So we tried to innovate by looking at obviously what was not in the market at the time in Portugal, and what we could do to differentiate ourselves from the big banks. And some segments maybe it was not interesting for the big banks, so we tried to focus on particular niches so that we could survive in such a competitive market, and where we could have a higher margin than the typical loan, mortgage loan or other loans or car loans that was very common. It still is in Portugal or other markets. So that's a bit the story about the innovative approach of BNI Europa, and obviously this was done fully digital with no branches, account opening online, and every interaction with the client was either through a call center or through electronic means.
Interesting, interesting. And keeping let's say a core team or some core areas, and leveraging the whole operations based on those on that network of partners and platforms. Very interesting. Pedro, I will now hand over to Ivo, who will approach you on the theme of regulations and challenges related to that.
Yeah, thank you. Thank you so much. Pedro, let me go a little bit off script here, if you allow me. I had a question regarding, cross country banking legislation, but based on what you just said before this, I think you almost answered, I don't know, 90 or 98% of my of my question. So allow me to change this for another one.
Okay.
um, CBDCs, central bank digital currencies. How do you think these kind of initiatives will change the financial sector, the banking sector, the fintech scene? I mean, we are hearing that even the European Union is pushing for the digital euro, right?
Mhm.
How do you think this is going to play out in the next 5 to 10 years?
Well, I think ultimately the central banks have been pushed to create their own digital currency because, as you know, there were already some fintechs who were already doing that, either through cryptocurrencies, Bitcoin, Ethereum, etc., or through fiat currencies. You have USDC, you have other currencies that you can now have digital. The problem is that these entities are not regulated, and you can make payments in digital US dollar, but when you put cash on these platforms, you don't know how the money is being managed. And there's been cases, as you know, FTX and others that went bankrupt because the management of these type of platforms is not done in a proper way. So when you put a deposit on these platforms, and you know that it's not a term deposit, it's only a deposit that you're going to be using later on to pay whatever you want. The problem is that they usually use that liquidity to invest in assets that were too risky. So they should have invested in short-term bonds, in liquid instruments, so that when there is a liquidity event, you're able to give the money. So that's why I'm saying it's inevitable that each regulator creates its own digital currency in order to prevent consumers to be exposed to these type of risks. So it's much easier for you to deal with a US dollar or a real or euro digital currency sponsored by the central bank, because you know the central bank is not going to go bankrupt and your currency is there. So I am a full supporter of that. Obviously, this brings bad news to the current financial banking system. Why should I place a deposit with a bank, assume a bank risk, when I can place a deposit with a central bank? But I believe banks have to evolve. And the reason why the central banks have not come out with these digital currencies is because they are still trying to figure out how to negotiate with banks. But the old model of we used as BNI Europa to raise deposits and then to convert it into loans, it's not going to function in the future because of this event. You know, you as a client, you can have a digital wallet with different currencies linked to the central banks, and then what you can do is, if you don't use that currency, that liquidity, you can basically buy treasuries, buy sovereign risk, instead of doing term deposits with banks, by basically taking the risk of the bank. I have nothing against banks, but if you deposit with a small bank, you're running a particular risk. If you deposit with a medium-sized bank, you're running, also a risk, but maybe smaller than a small-sized bank, and ultimately a large bank might be a bit safer, but you never know. I worked for a large group like Citigroup, and Citigroup, which was one of the biggest banks in the world, went bankrupt. So, I mean, you're never safe unless the government then rescues these banks. And so, what I'm trying to say is that the business model is going to change dramatically in the near future because of the event that you mentioned. And also, the other aspect that is quite relevant in terms of the digital currency is the payment systems. As you know, all the regulators are concerned about how much money Visa, MasterCard, and other players are making in the market by allowing you the privilege to make payments cross border or even within your own country. Why should you pay a 3%? You as a merchant, let's say you are a merchant and I am a customer comes to your store and I'm paying with a Visa or a MasterCard and you have to pay 3% to Visa for me to pay with a card. So obviously this puts pressure on the regulators to act. There has been already action in the European Union where there's a limit to how much these players can charge as opposed to the US and Latin America. And there has been others that have disrupted the system completely, like China or India, where they have now digital payments through QR codes, where they bypass MasterCard and Visa. They have their own systems, as you know, Alipay, etc. So coming back to the central digital currency, I think associated with the digital currency, there will be digital payments. There's an example that I usually give that is Pix in Brazil. That was an initiative not by a startup like Alibaba, but by the central bank itself who created Pix. And now you've seen exponential growth of payments through Pix. And why is that? Because it's convenient, it's safe, and retailers, the merchants, they don't pay these stupid commissions to banks or to the payment entities. So a retailer can reduce their prices so that ultimately a consumer is getting the price of the end product at a cheaper price because you don't have the embedded costs associated with dealing with. I guess this will come sooner or later. It will be a big revolution, and I think we're coming into the right direction because what is the concern is that the end consumer does not pay for all this through the product because there's no free lunch. At the end of the day, it's the end consumer that pays all this. And then the other evolution that I see in the market that is going to be very important, particularly for Africa and emerging markets, is the connection between central banks. So tomorrow you are someone in an African nation and you want to receive euros from your family in Europe, because usually the remittances are coming from the more developed markets where immigration is, so North America, Europe, and some places in Asia, to Africa, to other nations in Asia, to other nations in Latin America. And there is obviously a big margin being paid by the consumer, by someone who wants to send the money abroad. There's been a number of fintechs trying to work on this, trying to open accounts in each destination country to make it cheaper for the client instead of doing SWIFT or using platforms that are very expensive. But ultimately, when you have a digital currency, the central banks, by making a link with another central bank, there could be just some agreed exchange rate, whatever the central bank exchange rate or whatever. You could have the market, facilitating these transactions in big bulk, different currencies, so that you have the lowest possible FX exchange ratio possible. So that would benefit the client. So all this will be very beneficial, and obviously we'll have a lot of innovation coming out. But obviously regulators have to come out with these ideas to allow the consumer to benefit from this.
Okay, so these new technologies will in fact lower the costs of the payment, the global payment rail system, almost to, I wouldn't say zero, but uh, I don't know, to a fraction of what is today. That's what you're saying. Um, we're seeing, and that leads me to my next question, which is how do you foster innovation? How do you promote innovation, but also create safeguards for the end consumer? So some might argue that too much regulation will stifle innovation, right? But too
Mhm.
little could cause financial instability. Um,
Yes, it's a very difficult question to answer because, yeah, because there is. It depends on the country and the society that you live in. Okay, there are countries and societies that are much more conservative, and they prefer to have much more regulation. I'm talking Europe, for instance,
mhm.
is a
Very
very
conservative. Yeah.
regulated market. You see that now with AI. Before they even have any AI companies, are already regulating everything that is possible, as opposed, for instance, with the US, which has less regulation, and then they come with regulation later on. I'm a proponent of less regulation and regulate after the market is shaped by this innovation, and not kill the baby when he's born. So try to grow the kid and try to have safety rails as it grows. But obviously, I'm not a proponent of monopolies and like Amazon and others that have grown to a point where it does not foster competition anymore. So I think you have to balance the two. But
Okay.
I would believe the best solution, and for instance for fintech, is to allow this innovation to come to the market, clients to be exposed to it, and then do some regulation. I'll give you a specific example where I was personally involved, where I tell you, this is the typical not to do. Okay, so at BNI Europa, we tried to launch a new product, but it was a new product in Portugal because nowadays in financial services everything has been invented. It's just a question of tweaking to one side or the other. So we tried to launch what we call the reverse mortgage. So we all know that Europe and in Portugal as well, everyone is getting older and older. You have more pensioners than you have active population. Secondly, the Portuguese population also has the characteristic of owning property. So they are rich in assets, but they are poor in cash flow. They have a low pension and they may have one or two or three houses. So it is a typical case where it would be interesting for you as a pensioner to get access to liquidity by mortgaging your house. And that would give you the benefit of only paying when you die, and the heirs would sell the house and pay back the loan, or when you go to a home care and then you can sell the house and because you left indefinitely the house. So I can tell you, we were trying to launch the product under the current regulation, and the only regulation that existed was the mortgage regulation because as any other country, we just had the mortgage regulation based on people buying houses and allowing them to pay over time. But this product is quite different, as you can see. So we try to adapt somehow to launch the product. We launched the product, and then the regulator, a couple of months after we launched and after approving the product, he said, wait, no, this is too complicated. This audience is vulnerable. Older people, they don't know what they are buying. You better have very good, um, a very good detailed information booklet to guarantee that they know what they are buying. We did that, but even after that, the regulator said no. We prefer you to go to the government and have the government publish a law that the product can exist. And obviously, we didn't have the impact to allow to negotiate with the government. It would take years to launch the product and all that. This gives you an idea that what the regulator could have done in this case would be to basically let us launch the product, see if the product would be accepted by the clients, monitor the growth of this segment, and then regulate. Okay, we are now in a position to have a specific regulation on this product. And we actually created the product and formatted the product according to experiences in other markets that are much more developed than ours, like the US, the UK, Australia, New Zealand, Canada. Typically, the Anglo-Saxon countries have this product, and it was unfortunately the case that Portugal still does not have this product. So we ended up going to Spain, where the product was recently regulated, and we did and we developed a slightly different product in Spain, which became quite attractive, and it grew quite substantially. We grew the portfolio. Just to give you an idea, that I mean, I prefer a regulation which allows you to launch a new product with the existing regulation, and then create a separate regulation if and when the product justifies it. If it doesn't justify, if you sell a few hundred loans, I mean, if you lend to a few hundred people, it doesn't make sense to create all that infrastructure. So you should allow creativity and then come out with regulation and talk to the different parties involved once the market exists, not before the market exists.
Okay. And is there any specific jurisdiction or country that you look up to, and you say this country or this type of jurisdiction as the right mix of
I mean, there are quite a few
innovation and
jurisdictions. Yes, there are quite a few. I would say that Asia in general is very advanced. I would say Singapore, Southeast Asia, China to a certain extent, but they have gone back a bit to push into regulation much further than before. I think they went a bit too far, and now they are pushing back. But I would say clearly the Southeast Asian market is one. Singapore, I would say, is probably one of the key models. In Europe, I would say the Baltic countries have had a number of interesting experiences with very interesting new ideas on the fintech space. UK used to be a market like that. The regulator had to intervene, but it's still, I think, a good reference. In continental Europe, unfortunately, it's not been the case. It's been much more difficult to promote innovation, and it's a bit of a catch up. So sometimes they are worried about a little fintech somewhere in a European country, and then they let the elephant go through, like Wirecard, which I don't know if you heard about the story, this huge payment company from Germany that was a complete fiasco, and a company that was even supported by the German government, but that was, I would say, not a fiasco. I'm trying to find the name. A company that had even fake accounting, so you can see
oh, they
to
cook the
what
books.
extent
They cook the
yeah,
books.
they cooked the books, and so I mean, they were a fraud company effectively by creating transactions where there wasn't. So what I'm trying to say is regulators should focus on the big things, and let the small players like fintechs still develop themselves, and then eventually create the rails, as you said. But there are a number of good examples, and I think more and more in Latin America, I would say Brazil is really fostering innovation. Being a big market, it's more difficult, but they are doing that with one success story like the digital bank Nubank, which is now considered the largest digital bank in the world, and Pix, as I mentioned, the payment entity. So they came late to the picture with fintechs, but now they have been developing quite fast their uh, their ecosystem there as well.
Great. Thank you, Pedro. Andre, the mic is yours.
Thank you, Ivo. Pedro, so the next question is about mobile banking and financial inclusion, and especially focused on the African continent, because let's say around 57% of the population doesn't have a traditional bank account. If they have access to financial services. Given to your experience in Angola and in Mozambique, in working for a Pan African bank mostly, How do you see the mobile banking driving this financial inclusion in Africa?
Well, I would say it's been a big challenge for these markets to introduce electronic payments. I would say it's very easy. I mean, now the penetration of mobile phones in Angola or Mozambique and other markets in Africa is quite high, number one. Number two, I would say, apart from some remote areas, you already have data. So it's not an issue of only dealing with SMS. So I, I think we can all agree that now we come to a stage where data is really available. So this allows you to make a huge impact on creating an app. So at least now you can create an app. From that app, you can do banking basically anywhere. So then comes the issue of literacy, financial literacy. So I think the population in Africa in general is a young population. They are I mean, they are technologically savvy, so as opposed to maybe the European or some of the US population who are still older people who sometimes have some difficulty dealing with the apps and with these novelties. So I think having also low cost terminals, because before, you know, iPhones and this and that, so they was expensive. Now you have low cost terminals coming from India, from China, that people, that's the price is not an issue anymore. So I guess you have all the ingredients that is possible for anyone to have an account. Obviously, the concern of the regulator is that you allow these digital accounts to be used by clients, but is a two-tier market. There's one tier that is basically already banked, so they have an account in a bank and they can use its own digital app, but they typically are employed by some institution. They are in the formal market. They are in the metropolis. So that's one segment. The other segment, as you mentioned, is the unbanked people. So that have informal jobs, and these people, they need payment companies that allow them to have a certain threshold of amount of cash available in their accounts and make payments. Obviously, the regulator believes that after a certain amount, whether it's $500 or euros or 1,000, I don't know, but after a certain amount of transactions, they should migrate to a more regulated system, whether it's a bank or not, doesn't matter, but they have to have an additional level of KYC. So initially, just your name, your phone, the picture might help, but then at the second level, you need to confirm your identity through an ID card, etc. But believe it or not, this has become one of the biggest blockers of growing this population. But I'll give you an example of what happened in India that I think could be replicated in any country in Africa, which it could be somehow, some people might think it's going a bit too far, but I would say it's the only way. So they actually create solutions where you identify the individual not only by their ID, but by their iris or by their fingerprint. So there is a unique item in your body that shows it's you. You cannot fake someone else's ID. So I believe in this type of projects where if I'm sending money to someone in Africa that I need to take care of, I know it's his account because there's only that person. And for helpers in the NGOs, for other types of support that you need to guarantee you're sending the money to the right people, this is the only way. So you have to register the whole population by allowing this system, this to be covering all the population, and then the payment system will suddenly happen. Now, as you know, you can charge the phone. You have Unitel in Angola, other players in other markets like Vodacom in Mozambique. They have mobile phones. You can recharge your phone with additional, levels of cash, so you use it on your telecom conversations. But you can also use this, the same concept of M-Pesa to do as a wallet. So you could do that very easily. And obviously, there's been several attempts I believe, in Angola, but I don't think one has been the final solution. So I think sooner or later, a solution could be created for this. Who knows if the central bank wants to create its own solution? But what I'm trying to say is the number one obstacle is identity. Once you identify the individual, then you have his track record of payments, you have everything, his history. So I can lend to you. If you have this account, I know how frequently you spend money, how much money you have your an account, so I can eventually lend you based on your inflows of cash or outflows of cash. So that would help not only on the payment, but would help also providing unbanked people with loans much easier because of the history I have of you as a user of that account. So I think that is the first step, and then obviously you go from there to companies, to small companies that can use a similar system once they have been identified and linked to individuals that own those companies. Then it's another step towards, helping small businesses with payments, with loans. So it would be a much easier way of people, transacting instead of cash, or instead of taking risks with other apps that tomorrow they use one, the next day they use another one. So I think that is a possibility.
So, as far as I understand, what you're saying is that this digital approach will change all the game because at its core, it's going to create more trust into the system.
Yes,
So, it's going to
exactly.
deposit trust. You will know what kind of transaction that person is doing or has done throughout history and throughout his lifetime, and you will know if you can lend it to him or not. So you will solve that problem because nowadays it's very difficult to know how to lend in the African continent, as far as I understand. And one of the things that most studies reveal is that they go back to the history they have with the telecom or with the electricity or any bill that they have. They need to analyze this history and they need to understand if that person is eligible or not to have a loan. And with businesses is going to be the same. And on the same topic of trust.
And let me just interrupt there, just to give you an example. This would be even an instrument that governments could use to guarantee that the funds they are providing are reaching the person they want. Let's say you want to provide a family to help them to go to school, and you want to subsidize. You have to give a subsidy for school, so you can give to the kid who has an account the subsidy for him to spend in a lunch in school or whatever. So this would be also the rails for governments to support people that are at the low end of the population and in need help, in certain instances. So it would be also a good way to sort out these problems. But they need to know who they are sending the money to, instead of the people
Social.
people going to the for social care and everything, instead of people going to ask for the money and have these bureaucratic institutions providing with checks, or I don't know, or transferring the money, and sometimes the money doesn't ever reach the end person. But just sorry, but I
Still,
just wanted to
yeah,
give
No,
that
it's
as an
it
interesting.
additional
still
example.
happens, Andre. It still happens. Here you have a big social transfer program for benefits called Quenda, and you still have some people might receive their funds directly to their accounts, but some people will receive on prepaid cards, for instance, or in some instances even in cash. You have to have teams of people
Yeah.
going to physically to the places and hand out money, and sometimes that is not the best
with
solution,
with
Ideal.
but it
Yeah.
is the solution that
Yeah.
is possible at the time.
with digital payment, you can do a fencing around where you spend the money, right? That's one of the benefits, and that happens also in whenever you're approaching the lending process for companies. If you're lending to an agriculture practitioner, you can lend them and say, look, this amount of money, according to what the study has been, is going to be to purchase the seeds. This is going to be to purchase the utilities. So you can do this kind of fencing around the spending, and this is one of the parts that it's also very interesting. Um, on the topic of traditional banking and fintech startups, we see a lot of differences in both companies. One is much more innovative, the other ones are much more conservative. We already discussed that this is going to change mostly because the traditional bank's business model is going to be disrupted by the CBDCs or any other event that is going to happen in the next years. Considering also something that a guest of ours said recently, the future is uncertain, but for sure it's digital. So we know this is going to happen. How do you see traditional banking role and the fintech roles in nowadays?
Okay. Well, I have to disagree with your other speaker. It's not necessarily only digital, but why? And that is just an example how banks can still keep doing business. So obviously, we live in a digital world. Everyone wants a simple solution for certain things. For the other things, I want to have a human in front of me providing me with some advice. Okay. So I think banks have to be intelligent to focus on certain areas and segments of the products and clients where there is a need for intervention. So you have on one side the everything digital, so I don't need to interact with the bank to make a payment. In the past, I had to go to the bank, make the payment, or write a check. Now I do it on my app. I don't need someone to do this for me. Okay, I am autonomous with a number of things I can do in my app. But nowadays, people still need some support when they take a big decision on buying a house and they need a mortgage, or they are making a big investment in capital markets, or they want a loan for their company. So these are the things that still require human interaction. So I would say the best of both worlds is that you have a bank that has all the digital platforms for you to transact faster, that also internally the bank does have a middle office and the back office that is digitalized, and a lot of people forget this. It's sometimes some banks have a very beautiful digital app, but then you have a problem. It's all human in the back, and it goes through three, four, or five different people, so they don't have the right infrastructure. So they also have to have the right infrastructure in the middle and the back office, in the control functions as well, so that you don't have to wait months to open an account, that the compliance is able to know who you are and retrieve the information and open an account instead of months, in days, and then interact with you in an intelligent way when you need that person. But obviously, there will be less people interacting, but specialized people. And the typical bank clerks that you had in the past, they will disappear because there's no point on having them. That is the ideal banking model. And I also believe somehow in some sort of specialization. In the past, there was the common idea of universal bank. There's a bank that does everything for you. If you want, since you are a student, when you open an account, until you are a big company owner, and I'll deal with you. I mean, nowadays there's so much that can be done that I think a bank who is good at providing banking service to large companies cannot be also extremely good or excellent at providing businesses for SMEs or to an individual or to, I don't know, to governments. I mean, there has to be some specialization, and so the universal bank model is also being challenged because parts of that business they are being eaten by fintechs or specialized entities,
Verticals,
right?
yeah.
Yeah, verticals. I can be an expert on providing banking services to the retailers. That's a segment, or to the tourist sector, whatever, to the leisure, hospitality sector. Like there are payment companies that the only thing they do is they are specialized in hospitality sector. You probably don't see it, but they are there. You want to buy airline ticket or you want to book an hotel, you have payment companies embedded in those. So these are specialized in certain verticals, which is different from a company that is making payments in the gambling sector or in the gaming or in other sectors. So that's why I think specialization will come, and the bank will lose much more in the moment you have these vertical experts.
Integration. Yeah.
Yeah.
So you believe that the banks are not going to disappear? They're going to transform themselves into more specialized entities. They're very regulated, so they will have to go into very deep processes of specialization, but internally also processalization. One of the things that it's very interesting, and I've been witnessing as well, is that they create a very beautiful app that interacts very well with the client, but then all the back office processes, they're not interlinked. They don't have the KPIs, they don't have the SLAs, they don't have anything. So it's a bottleneck. You have a bottleneck in the tech department or the tech direction, and then you don't have anyone in the back, and that's going to be also a very big challenge for the banking sector. But also you see this as being a way of specialization, and probably not abandoning the interaction between human and
Exactly.
the client. So this is not going to happen in your perspective. Very well. Well, I'm going to handle now to my colleague Victor.
Thank you, Andre. Well, Pedro, it has been a very interesting journey talking about financial issues with you. You have already mentioned made some predictions in terms of few things that may happen in the next couple of years. For Africa specifically and Angola, what do you see as the most probable events, considering also all the fast changing technologies, the AIs, and so on? How do you see this changing in the near future and impacting Africa, especially?
Well, that's a big question for another 2 hours, but I'll try to make it in 5 minutes. Well, there are quite a lot of challenges for Angola and other African countries to be able to overcome. And obviously, I know the regulators are trying to basically follow the good practices elsewhere. That's normal. Every regulator interacts with other regulators. But as I said, I mean, there are basically, uh, I would say, three ingredients that need to be in place for this innovation to come out. One, financial literacy. Two, data available. You have to have data to rely on that to lend, to do transactions, to know the client. So you need to know who you're dealing with, what companies are you dealing with, what is the historical information of these individuals or companies. So there has to be, much more information about so that banks feel safer about lending. So this infrastructure still needs to be built up and grow much further. And then the third element is stability. I think also the fact that a number of African countries have difficulties in terms of having currency stability, economic stability, financial stability, that also is a very difficult environment to innovate because the first thing you are worried about is to keep your money safe. So that's why I think, first of all, you have to guarantee there's a certain currency stability, and then move further up in the different ways I mentioned to you in terms of data availability uh, and financial literacy. Once these three components are there, I think there will be a certain boost on the availability of credit, on much more transaction flow, much more FX flow between these countries. You know, a number of countries, including Angola, it's still a closed economy. You can just not freely transact. How can you have innovation if you're not able to bring investment into the country and guarantee the repatriation of that investment? So other countries have been able to overcome that by having funds, fintech funds and innovation funds that invest, like markets like Ghana, like Nigeria. They still have those problems of fluctuation of the currency, but there has been a way of international investors being able to invest and try to benefit to develop basically the economy. So all these ingredients need to be in place to guarantee that you have access to innovation and to the best technology available.
Well, thank you so much, Pedro. It has been very, very, very interesting.
It's my
Uh,
pleasure.
yeah, and hope to see you soon or to have you soon with us or on some fintech talk anywhere here
Okay,
that we
sure.
can use our platform also to disseminate to
Thank you
our
very much.
viewers,
It's been a
to our
pleasure.
viewers and listeners. It's our pleasure, Pedro. To our viewers and listeners, thank you very much for being with us, for following us on the different platforms. Yeah, and thank you very much again.